Macro market trends, stock selection, ETFs, options, just some of the topics covered in Tactical Trading. Well, as we speak, a decent little rally going on in the stock market. Is the bottom in, or is this just temporary? Let's find out from our tactical trader, Kevin Cook, over here. Is the bottom in?
No, not the final bottom. 1120 was a great bottom to trade off of. I was selling puts down there on industrial, energy, and materials names, Cummins Engines, Suncor, Southern Copper, and then I was buying a leveraged ETF, the UPRO. So I'm trading up here, enjoying this rally. We may get to 1250 or 1260 as predicted, but I don't think that this is over. This is the relief rally. Okay. And markets swing on emotional extremes of optimism and pessimism. We had a lot of pessimism. Now we're swinging back to optimism. Some good data, maybe a jobs program next week from Obama's new jobs czar. But we don't have all the data yet that tells us whether or not this is a recession.
So is the market overreacting by pricing in a recession as everybody said it was, or is the market telling us we can be more optimistic going forward?
I think the market did a good job of pricing in a probable mild recession, but we still don't know yet. So what I want to show you, the market really will fool most of the people. We say it's designed to fool most of the people. Yeah. I'm going to show you a scenario
here. It works
here.
on me, I tell you.
I've traded it actually pretty well this go round. I've done worse in other recessions, but this one's working out here. I'm going to show you the gray skies 30% scenario, where this is the relief rally, and look at my chart here. We trade up to 1250, and then we go back down. We crack 1100 on the S&P, which has kind of been my line in the sand, and we trade down to 1050. But I think there's going to be very strong support at 1050, and then we find out 6 weeks from now, hey, it's going to be a very mild recession. We're just going to touch 0% GDP growth, and I think the market will roar back up from 1050. So this is a possible scenario here. You're looking at 50 and 200-week moving averages on this chart. Look at the 200-week coming in at 1150. That's important note. So there's a lot of tension here, political tension. Is the consumer dead? Are we going to get a bailout? Should we?
Right.
So all these things. Is there real demand? And that's why the market will swing back and forth like this.
So can't put a time frame on it, though.
I think that this 30% chance of this scenario unfolding over the next 6 weeks, that we go down to 1050 and then back up.
Okay, cool. Thank you for that. He's our tactical trader. He's Kevin Cook. You can follow him on our homepage at Zacks.com under the Tactical Trading banner. That's what he calls his column. Or on Twitter at Kevin B. Cook. With Kevin, I'm Terry Ruffalo.